This episode of Talk Your Book is proudly brought to you by Honan, providing a complete range of insurance, risk, and financial solutions.
Fundies called me up, told me to take a look, but stay stubborn as bulls and talk their own book. Get the money, get the money, get the money.
Well, Gary Rollo, thanks very much for coming back on Talk Your Book. You're one of our repeat guests. I thought before we get into your stock pick of choice, if you could start by telling us a little bit about Montgomery Investment Management and the small cap fund that you manage there.
Yeah, thanks, Chris, and thanks for having me back. It's a pleasure to be back. I love coming on your show when it's when the option's there. Look, we run the small cap fund here, myself and my fellow portfolio manager, a guy called Dominic Rose. We probably have an attitude towards some of the growth stocks that have been sold off at the moment. They're the ones that are really driving our interest. We got about $170 million under management and growing. Yeah, we're always got our eye open for interesting stocks that are going to do some of the heavy lifting in our portfolio. So, yeah, that's us.
And what stock did you want to talk about today?
So, the stock I'm going to give an update on today is a stock called Symbio. It was called My Net Phone. I mean, this is one of those kind of overnight success stories that I'm about to tell you, but it's been a decade in the making. Look, its market cap's about 360 million bucks. It's founder led. So the guy who started it he's a CEO, still in the business every day. What it does is it provides telecom companies or people who want to access the telecom network with software that lets them do that in an efficient way. It's got 50 million bucks of cash on its balance sheet. It's profitable, growing, generates cash flows. It's also on 9 times EBITDA. That's an important factor, which we'll touch on a little later, which for an industrial stock is cheaper than the market. An industrial stock normally trades around 12 times, Chris. So, you know, we think this is a much better business than the market. And when people start thinking about growth again, we think this stock's got a lot of boxes that's going to be ticked for those growth investors. So, but you're not buying it with any sort of growth valuation. So hence why I thought I'd talk about this one.
And talk to me about which geographies they operate in.
So a little bit of background on Symbio and its products, because the story here is a product-led story. So what they do, the market that they operate in, is if you're one of these new fancy customer-facing applications like rideshare or a delivery app, or you are working from home, you've probably already used Symbio software here in Australia. Symbio today, they only really operate in Australia. Now, the reason why that's pretty interesting is these big, let's call them the mega customer-facing apps like Uber or Delivery Hero or whatever your application of choice is, or Microsoft Teams or Zoom for work from home calls. They want to offer the ability to call directly inside their application, but they don't want to have to integrate their solutions directly into the old world telecom network, because this way of accessing the telecom network just wasn't envisaged when these telecom networks were designed and built. And Symbio's software, it bridges that gap. So it makes available the great utility of making a phone call from an app that needs to terminate on an old world telecom network. And for the guy who puts that in the app, so the Uber or the Microsoft Teams of the world, they see their value add as the ability to innovate their application or tool set rapidly to meet customer demands. And if they had to keep going back and managing all of the connections back to the old world telecom network, they'd spend all their time working there and none of their time on that innovation. So that's the value add that Symbio brings. Their solution has got a fancy technical name, CPaaS, Communications Platform as a Service. And that market, it's been growing strongly here in Australia for the last 5 years. I mean, if I look at Symbio's metrics, for instance, the key metric is phone numbers that they host on their platform. So about 6 odd million phone numbers that they host on their platform today. and it's been growing at a CAGR over the last 5 years of 22, 23%. So it's a healthily growing market, and we think there's a lot more growth to come. And the opportunity for Symbio, though, is not just in Australia.
So this is that functionality where you ring the Uber driver and say, you got 2 minutes away, and then you turn around, where the bloody hell are you? That sort of functionality is what Symbio offer.
That's the capability that their tool set allows. Because if you are, let's pick on the idea that you're looking for your pizza, Chris, not your taxi, but your pizza. I like the idea of you looking for a pizza. If you can't find your pizza, you got to call the delivery guy and say, look, where is it? And the food delivery company doesn't want to be involved in where's my pizza. They don't want to be involved in that. They just want to give you the tool to get that job done efficiently and add more users onto the platform. So it's that capability that Symbio is allowing non-telecom companies to terminate calls on the old telecom network. It's literally analog meeting digital, and their solution is elegantly built. I mean, let's be honest, they were a tier 2 telco that needed to find a niche, and necessity is the mother of invention, typically when you're a small company. And these guys found this niche, and they have built a solution that serves it. And along has come this massive customer base that's growing really quickly, and their solution is very suitable for that task. And they've proven to be successful in Australia. And the equity story for us, and management's articulated us, it's not me envisaging it, is that they take this product overseas. Asia's on our doorstep, and that's where the future growth lies for this business.
And it sounds like this strategy moving into Asia is to try and acquire a business in each geography they move into. Is that how you read their strategy? And what can you see on the horizon in that front?
So let's set the scene for Asia. Today in Australia and New Zealand, look, we got about 30 odd million people here, and there's about 80 million phone numbers for those 30 odd million people. It's a strange quirk of life, more phone numbers than humans. As you go into Asia, there are a bunch of markets out there where the likes of Microsoft Teams or whatever the rideshare company or the delivery company of choice is in that market, they want to offer these same services, but the telecom network has the same problem that the network has here in Australia. It's not very easy to access those networks with those new technologies. So a company that offers something like Symbio offers, that ability to do that is an important attribute in that market. But many of those players don't exist, or if they do, they're not quite so proven that the likes of the Uber of the market wants to deploy against them on a sustainable basis, right? So that's the opportunity. The customers that Symbio has here in Australia, the big brand names, they want to run their businesses in these Asian markets. And Symbio has identified 6 markets. And I'm going to try and remember these off the top of my head, Chris. You can give me marks out of 10. Singapore, Malaysia, Vietnam, Taiwan, South Korea, Japan. I think those are the 6 the company's identified. If I go back to my little model, which I did earlier before this call, the population in those markets is 340 million people. Look, that's a 10x uplift in the total addressable market. I don't know how many phone lines are in those markets. That my research doesn't extend to that, or I couldn't get credible data on it. But it's a sufficiently large increase in addressable market to make it very interesting, particularly against that backdrop of our view that paying 9 times EBITDA for this thing, it's still growing in Australia. You're not paying for any growth today. So, coming back to your question, they are going to launch this tool set steadily into each of those markets between now and 2025. And the key question, your question is, well, how do they do that? They can organically go into the market with this product. They already know many of the big customers, and that will give them a good kickstart. But probably what they want to do is find a little mini telco in each of those markets, put some money to work, get a little bit of a leap or head start with all of that connectivity in market that they need to establish. And that would kick things off. And so, they're cash flow generative today, and they've got cash on the balance sheet and a debt line that should allow them, if that's the extent to which they go to make acquisitions, and they can always use equity as well. But these deals should be small. They should probably be accretive, and they should be a great leg up in terms of time and capital into what should be a much larger addressable market opportunity.
And they've sold off some legacy businesses. Is that all tidied up now? Is there anything else left to sell, or is it now a sort of clean balance sheet and onwards and upwards?
Normally, when you hear the words legacy in a question, you should be frightened and nervous. But this is what I think has really created the opportunity in this stock. I come back to my earlier remarks that Symbio's genesis, its start point in life, it was a tier 2, and maybe I'm being a little bit kind, telco type player. In telco, getting scale quickly really, really counts. And so the management team cleverly got to scale in the telco market here in Australia as quickly as they could. And that meant buying businesses that perhaps didn't have all the growth characteristics or the footprint opportunity that they wanted to. But now the business has scaled. And what it's done is it's got to the point where it's saying, hang on, this great opportunity in CPaaS has come up, and we have a very compelling product set and client list. And they're telling us they want us to go over here. And that's a growth opportunity. So you've got the shedding or the divestment of these legacy old world attributes that they needed to get to scale. And now you've got the focus onto the opportunity to deliver the growth. And that's the history, because it's a confusing history, and fund managers were lazy at the best of times, and sometimes it's not always the best of times. When things are confusing, we put it to the side and we wait for clarification. That's the point at what Symbio is in its life cycle now. It's clarified its growth opportunity, and it's going for it. Those 6 markets, it's going through the market entry events. It's done Singapore already, and Malaysia's kind of on the launch pad as we speak. Who knows? That's the kind of point in the life cycle that it's at, Chris.
And am I right when I look at the customer base of SYM compared to maybe some of the other comparable businesses listed on the ASX in the telco space, it's a more institutional grade customer than perhaps some of the smaller telcos operating? Is that how you see the customer base?
So as the business is reforming around these key product lines, and CPaaS is one of them, it's the bulk, and it's going to do all the heavy lifting for the growth. Without that being there, the other product lines really don't work so well. So it's the core. But they definitely do offer services to large corporate and government enterprises. But the business, the growth profile of the business is going to be taking this tool set and the software smarts embedded in it, and the proven relationship with those big enterprise technology companies like Microsoft Teams, for instance, as a brand name, or in the consumer space, one of the delivery guys, for instance, and actually embedding these lines of code into their stacks, into their technology stacks. So the idea is that as these big companies grow, they take Symbio riding along in their coattails with them. And it's those relationships there that will drive the growth in the business. They're not going to throw off some of their big customers here in Australia. That's going to chug along, hopefully quite nicely, but it's not really what the focus of why we're there. I mean, if you look at the valuation regime the business sits in today, it's valued like a telco that's just going to chug along and not do much. And this optionality of that growth that I'm talking to, well, in our view, you're kind of getting that for free.
And roll-ups have the potential to sting investors when they stop rolling up and all of a sudden there's no growth there. What sort of organic growth numbers will you be looking at them getting to give you comfort that even once they stop finding attractive businesses to buy, there's some growth in what's left over?
Yeah, that's a great question. So if we peel back to what the company has today and we look at the core driver in the company today, that CPaaS business generates the bulk of the gross profit in the business. And its key driver is phone numbers hosted on the Symbio platform. It's about 6.4 million phone numbers hosted on that platform at the first half of 21. We're going to get the results in the course of the next couple of weeks, so there'll be an update on that. If I go back and look at all of the data that the company has reported pre-COVID, these These phone numbers were growing at 20% CAGR on their platform. It had a nice little tick up to about 25% growth rate as COVID came along and lifted some of the needs. So it definitely has been a COVID winner, but it's not been a stratospheric COVID winner. And if you go and look at the share price chart since November, the stock has halved. It's gone from $7 to, I think 4 and change as we sit here today. So all of that growth scenario has come out of the price, I suppose you would say. But the business is still growing. In Australia, I'd expect the business to be growing at sort of mid-singles, low double digits, high single digit type rate. So you've got a growing business without the Asian opportunity. And as you've heard me say, the Asian opportunity, when you think about what that brings to the equity story, and you think about growth investors checklists, they've got total addressable market, check, it's a 10x. Software business model, ooh, check, we like that, it's got scale. Earnings visibility, because it's recurring kind of subscription fees that you get, check, ooh, we like that a lot. And then you look at unit economics. The gross profit per phone line hosted on the platform is about $5 per annum. And if you think about those populations that I gave you earlier, even if you just say, look, the addressable market's 10 times what they've got today, and they've got 6 million phone numbers on that platform today, 6 times $5, that's $30 million of gross profit. And if the addressable markets are 10 times the size, that's $300 million of gross profit. The market cap of this thing's 360. So there's absolutely nothing in the valuation regime for that business today.
Well, you mentioned that fund managers are a lazy lot, private investors are even lazier. So you spelt out the story very clearly for us. And mate, thanks again for coming on the show.
It's a pleasure. Always enjoy it, and hope you have a win out there.
Thanks, Gary. Cheers, mate.
Cheers.
This episode of Talk Your Book was proudly brought to you by Honan, who go beyond a transactional insurance broker to deliver better outcomes for their clients. If you're enjoying Talk Your Book, make sure you subscribe to Chris Judd Invest.